Good morning, guys. This is JR from Secure Metals Exchange, bringing you another technical analysis for today, Friday, August the 17th, 2012. It's approximately 11:49 a.m. Eastern Standard Time. So currently, we're looking at the daily time frame here for gold. Gold has been trending sideways here for the last few months, really since early May to the present. We've just been trending sideways. Now we have managed to make to create newer lows, higher lows actually, okay, and that's fairly positive. But the issue is that now that we've gotten away from this triangle, which we were dying to get across it, now the new issue is we're trying to get above 1625. Now we've created a ascending triangle where the highs are getting, I'm sorry, where the lows are getting higher, but the highs are staying roughly the same. So the question is, are we going to be able to hit this $16 to $25 zone and continue to go higher? Again, we do have more resistance here at around 1640. That's your high, your June high. Okay, and we also have the 200-day moving average, which is a very significant moving average at around 1645. So again, a lot to cover here around this level, as well as your Bollinger Band. I'll talk about the Bollinger Band as well in a second. Your Bollinger Band is basically this these shadows that you see hovering above and below the price action. Okay, excuse me. But at any rate, as of right now, you have your 100-day moving average, your 200-day, your 20-day moving average, as well as the 50-day moving average. They are all under our prices, which is fairly positive. But again, the only thing I fear right now is you have a lack of volume. Okay, so anytime you're starting to have a rally, you want to be supported. You want the volume to support you. Stochastics are fairly confused. They don't know whether to go up, whether to go down. But again, if this trend line is correct, then it'll probably hit this, maybe hit above this price, or maybe around 1625, possibly even, to 1635, and maybe even 1640. But at this point, we have to wait and see what's going to happen. We do want to continue to respect this line, 1625. This morning's high was 1620, but again, we had some slightly positive consumer sentiment come out today, and that brought the metals down a bit. So again, a little bit of support here. Stochastics are kind of a bit confused and no volume. Again, I really don't think this thing is going to hit this. I don't see us breaching these levels here. At least if we do, I see these levels holding. Worst case scenario. But again, who knows? Maybe we have another round of big buys like Paulson and Gross, and maybe that'll give us the boost that we need. But who knows? In the meantime, we do have some levels here to look out for. If it does bounce back from here, from 1624, 1678 would be your level. Your initial level where you'd find support, and below this level, this is 1655, 1652, 1555, 1553. We don't want to fall below these levels and start creating lower lows. Okay, as far as silver goes, silver also trending sideways. Again, since early March, all we've seen is a high of roughly 28.40 and a low of 27.10, with a few breakouts to the downside as well as to the upside, but mostly within this a band here. Okay, and as I said earlier with the Bollinger Bands, anytime you have these Bollinger Bands, anytime you have these shadows coming together, that usually suggests a breakout is to come. The question is, are they going to come to the downside, or are they going to go to the upside? So at this point, we just don't know. But we do have a few levels of resistance here that might continue to push us back down to this level, roughly the $27 range. But again, the metal continues to stay well supported, and at least we're out of this triangle here. But again, silver is showing the same technicals that gold is. At least as of right now, you have this ascending triangle here with support at around 28.40, and that's really what we want to see. We want to see a move above 28.40. We want to stay above these levels for a little bit, and hopefully take this next high out at around $28. I'm sorry, $29. The high $29. Okay. Stochastics again fairly confused, and volume again not suggesting that we're going to make a huge move to the upside. Now we did have some good fundamentals some big players getting back into the metals. Paulson, which manages a multi-billion-dollar fund, he just, I think right now his stakes is at 44% in bullion. So that tells you a lot about what the market suggests about precious metals, at least in the long term. I don't think these are short-term positions where he's looking to get out at 29 or 30 bucks. Most likely he's looking at this chart here. He's looking at the weekly chart. He's going to see these levels over here, and hopefully they'll hold. Even if we come down to these levels around the $25 range, most likely these are long-term positions, and he's looking to get out of them at these highs again. Okay, so another thing I wanted to mention briefly is basically the times of the year where the metals usually rally. Usually between August, July, August, September. Usually you see a low and you see a high. So in 2005, we saw a move from $7 to a high of 15 bucks. Then we came back down. Then again between August and March again, we saw a move from $10 all the way up to $14. So you saw about a $7 move here, about a $4 move here. 2008 was a little bit, obviously, a little hectic with the recession that we had back in 2008. But between 2007, during August, we saw 1154 prices go all the way up to $21 prices. Okay. So again, a big move to the upside, about a $7 move again. So far, the smallest move we've had to the upside between this time where we are in August to, let's say, in the next 6 to 7 months where we see March and May come up, March, April, or May, we saw a move from August all the way up to March again for $21. So again, the low was 12, the high was 21. That was about a $8, $9, $10 move. We saw a big dip because of the recession. We saw a false breakdown. The metals came down here. A lot of people probably got psyched out, and they sold out their positions. And next thing you know, this metal rallied again. So between here we are again in August, we see another low of $12, and here we are coming to the new year. Again, we see a high of $19. So between August, $12, the high again being $18, we saw another another $6 move. And again in 2011, we saw a move from $17 all the way up to $49. That was basically a serious move that the metals did. And if you notice, if I pull back on these levels, you see a lot of consolidations after the big moves. A lot of consolidations. A lot of consolidations through time, not necessarily sell-offs. They're just mostly, at least what I see, is mostly consolidations through time. And that's what it looks like this is doing. It looks like the market is consolidating through time. It came up from here, never looked down, and we are currently being held up over here. We might have another scenario where we might have another false breakdown here. And the metal might come back down from here. I would probably say to this level here. Who knows? It might even test the 200-day moving average at around $23. But my point is that every time we've gone down, we've seen very strong support. And this just basically looks to me like one of these moves here, just obviously on a much bigger scale because the prices are much more volatile. But again, if you're looking at the long-term fundamentals, this should hold around these levels here. And before we make the next move up, which at least in my opinion, I would say within the next 3 to 4 years, we'll see silver at anywhere between $50 to $80, and on gold, you'll see gold anywhere between $2,500 all the way up to $3,500. At least in my opinion, within the next 2 to 3 years. That's I would definitely say at least before the end of 2014. But who knows? Timing is very, very, very difficult to predict. The price action is a little bit easier to predict, not time. And besides that, gold looks to be exactly the same. If you look at the longer term time frame, I'm not necessarily going to go through the whole thing. But again, do you see the highs? You see the moves from the bottom to the highs. Always, usually, and this is usually the time where we start the rallies. Usually around the September, August, October periods. And again, just like these sides here, it just looks like, again, we're just consolidating through time before we continue to go up even higher. All right, guys. Thanks for watching. Have a great weekend. Bye-bye.